It's true, Thomas. And to be completely frank, it took me probably a year to adapt from a M&A role to an investment role, because I mean, you have a lot of reflex. As you said, everything is great, everything is kind of positive for an asset that you want to sell or to buy for your clients, where you need to live with the assets once you have acquired it. So it's completely true that I think that what is very important is like when you assess an opportunity, you assess the pros and the cons and try to see if the cons are kind of red flags and compensate, I would say, the willingness to do a transaction. So that's kind of the first thing. Second thing, I mean, you need to understand that if a transaction or an asset that you assess is in line with your strategy, because I mean, you can have different risk profiles, you can have different, I would say, returns profile also. So I mean, when you have some guidance and you have to follow a strategy, you need to be a bit disciplined here to make sure that you're not wasting your time in something that, even if you think the deal is interesting, it's not part of your mandate. So, I mean, in terms of, to answer your question, in terms of mindset, you need to be kind of defensive in terms of your approaching. So what could go wrong? What's kind of the worst
Mm.
case scenario? Is it acceptable? Is there like some kind of mitigants to those kind of worst case scenario? But also you need to see what are your upsides, because I think at the end of the day, you're trying to buy an asset, a situation where you're not going to overpay. So you need like try to see like, okay, I don't want to overpay, and this is my defensive case, especially in infrastructure. But what are the growth avenues where I can get my alpha? And hopefully, if things goes well, and if we manage to implement the business plan, this is probably where we are targeting to go.